Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings. Today we are diving into Katapult Holdings' latest 8K report. And let me tell you, this one's a bit of a roller coaster. It involves amendments, potential new loans, and a little bit of an oopsie with their data. You know, just the usual corporate stuff, but with a dash of financial suspense. So what's the big deal? Katapult, which focuses on lease-to-own options for shoppers, had to make an amendment to their existing loan agreement. Why? Well, it seems they found some errors in their data which led to them exceeding their borrowing limits. Let's dig in. The earliest event reported is February 20, 2025. This is the date when things started to change for Katapult financially, at least according to this report. Here's where the main action is. On February 20, 2025, Katapult entered into what they call the 18th Amendment to their loan and security agreement. Yes, you heard right, the 18th Amendment. This is like revising a contract for the 18th time. What does this mean? Well, think of it as constantly tweaking the rules of the game because something isn't quite working as planned. One of the key changes involves what Katapult can count towards their liquidity covenant. Basically, this means they can now include certain deposit payments they've made to their service provider for the Katapult Pay product. It is like saying, hey, we have this money tied up, can we count it as available cash? They also reduced the minimum liquidity covenant, which is basically the minimum amount of cash they need to have on hand. It went from $10 million to $7 million temporarily before going back up to $10 million. The maximum total advance rate for the first quarter of 2025 has been increased from 120% to 125%. Imagine you have a credit card with a limit. This is like the bank raising that limit slightly, allowing Katapult to borrow a bit more against its assets. Now here's where the plot thickens. Katapult is trying to get new loans. These are referred to as potential new loan facilities, and as part of that process, they're doing a review. And during that review, they found some errors in their data applications, which are primarily used in connection with generating reports required under their credit agreement. In simpler terms, they found mistakes in the software or systems they use to track and report their financials to the lender. These data errors led to a situation where the amount they had borrowed actually exceeded what was allowed under their agreement. Think of it like accidentally overdrawing your bank account because your checkbook was wrong. The good news for Katapult is that the 18th Amendment includes a waiver. This means the lender is saying, okay, we understand there were errors and we're going to waive any penalties or defaults that came from those errors in the past reporting. It's like getting a free pass on a mistake. As a result of this amendment and waiver, they claim to be in full compliance with the credit agreement, at least for now. If you want to read it yourself, you can find the full 18th Amendment to the Loan and Security Agreement attached as Exhibit 10.1. Now, before we get too comfortable, let's talk about forward-looking statements. The company uses this section to warn that things might not go as planned. Basically, they're saying, hey, we're making predictions about the future, but things could change. One of the key forward-looking statements is about their ability to get those potential new loan facilities we talked about earlier. They admit there's no guarantee they'll get these loans on good terms or even at all. This could impact their ability to refinance their debt in the near term. It is like saying, we're hoping to get a new loan with better terms, but we're not sure if it will happen. They also mention the need to meet future liquidity requirements and comply with restrictive covenants, which is basically a fancy way of saying they need to manage their cash carefully and stick to the rules of their loan agreements. They're managing debt, it's a constant balance. So what can we learn from all of this? Katapult is working to secure new financing while dealing with existing debt. The data errors and subsequent amendment highlight the importance of accurate financial reporting and the potential risks that come with it. Now, assessing the company direction, Katapult faces both strengths and weaknesses. On the one hand, they're actively seeking new loan facilities, indicating a desire to grow and refinance their debt. On the other hand, the data errors and the need for constant amendments to their loan agreement raise concerns about internal controls and financial stability. A notable risk is their ability to secure those new loans on favorable terms. If they can't, they may face challenges in meeting their liquidity requirements and complying with debt covenants. As for conclusion, it's hard to say for sure without a full financial deep dive. However, these filings suggest a company that's navigating some financial hurdles. They're working to improve their financial position, but there are risks and uncertainties ahead. Thanks for watching, everyone. If you found this decoder helpful, give us a like, drop a comment, and subscribe for more insights into the world of corporate filings. See you next time.